You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
The build-to-rent trend is hot right now, but construction costs are creating major headaches for developers. They're having a tough time getting materials of all kinds, from key components of a home like lumber to small but necessary pieces like metal truss connectors. These shortages are pushing prices higher and causing delays in finishing products, all of which add thousands of dollars onto the price of an investment property. I'm Kathy Fettke, and welcome to The Real Wealth Show. There is a silver lining, and you'll hear about that in this episode from a build-to-rent developer and property manager in the Jacksonville, Florida area. Our guest shares his side of the build-to-rent story to help investors understand why it's been so difficult to get new rental homes on the market, how he's dealing with supply chain issues and a volatile pricing environment, and how he expects the pricing issues to play out. So, Chris, welcome to The Real Wealth Show.
Thanks for having me. I appreciate it.
It's always good to find out what's really happening out there, boots on the street, and you've got lots of boots on the streets. You've been building how many homes?
We're on track to do right around 1,000 units this year. We may be a touch over that. Yeah.
This year, amazing. All right, well, let's enlighten our audience on what you've been going through this past year.
Oh man, that opens it wide open to all sorts of topics. But I mean,
specifically in building, let's just focus on that.
Well, it's been a crazy year. We've seen just really an unprecedented change in our whole economy. But what everybody's starting to see in the inflationary effects in the world today. We've really been feeling for the last 22 months. And we kept thinking, well, it's going to stop, it's going to stop, it's going to stop. And everybody kept saying this was transitory. And then it just, after 2 years, I don't know if it's really transitory anymore. So that's really been the biggest, issue, I would say, or the biggest focus of our company here since COVID is just dealing with this changing environment of, costs going up on a daily basis, not being able to get the materials that we need to build the homes, and really, changing our whole business model around to be able to plan much further into the future, source much further away from our home bases and much further away from where the homes are being built. That's really been that's really been the key for us this year, has been trying to overcome those challenges. And, every time that we think we have it licked, we turn around and we get hit with something else. And,
so let's talk about specifics. Yeah, specifics. Like I know on our projects in Reno, the cost of lumber went from, 20 something thousand per house to 120 something thousand per house. That really affects your bottom line, right?
Oh, yeah. And I mean, the margins aren't that big. The margins aren't as big as the fluctuations, which is frankly why everybody in the building industry, from builders to the subcontractors to the material suppliers, are, really terrified, because they're trying to operate in an environment that is just so unstable. But yeah, lumber has been the big one. I mean, that's been a roller coaster. It goes up and then it starts to come back down, and you think, the world is coming back to normal again, and then it just shoots right back up again. Concrete has been the same. Concrete took huge increases here at the beginning of the year. Everybody started switching away from lumber to concrete block to try and hedge against lumber. Well, that drove, concrete block prices up, and, drove to actually some block shortages here in Florida. But we've seen it from everything. I mean, even the little plates that hold the trusses together. For a while we couldn't get lumber to make trusses, and then we didn't have enough labor to make trusses, and now we don't have enough of the little metal plates that hold the trusses together to make trusses. So it's been, one thing after the other. But you get down to these tiny little components. I mean, we've had some fire dampeners on back order that have held up some projects for 6 months because we just cannot get the materials, or can't get the building officials to agree to a substitute product. So it's, it really is everything. And, It's interesting. I've been watching all these indexes since we've, been on this roller coaster ride. And the Fed, the St. Louis Fed puts out a great index. It's called the Producer Price Index, and it tracks inputs into residential building and construction. And that index has gone up 78 points since April of 2020. So since the beginning of COVID, that's gone up 78 points, which is about a 36% increase. And I went back and I was looking at the history, and it took from 2004 until 2020 for that index to go up 78 points before. So
Wow.
in the last 22 months, the index has gone up more than it did the prior 16 years combined. And that kind of helps put it in perspective as to why everybody is freaked out, for lack of a better term.
Yeah, so let's talk about it from the perspective of a small builder, excuse me, a small builder, because we're just a small group, and you have done a lot of homes, but at the same time, nothing near, the national builders. So the national builders seem to be moving right along. Maybe they were able to stockpile supplies, or maybe they get first dibs with the suppliers because they order so much. I don't know. I don't know if they're dealing with the same pressures that smaller builders are facing. Do you know?
Oh yeah, I do know that they are facing a lot of the same pressures. We have a lot of our staff has come from, national home builder world. And so they've got a lot of friends in these different, building companies and the big nationals, and they're all struggling. They're all, missing their production targets. If you look at any of their quarterly reports, it would be difficult to find one that's that met their first quarter projections for closings, because they're having the same material shortage issues that the rest of us are. And and they're struggling through it the same way that others are. Now, some of them, there are a few of them like trusses, that own their own truss plants. So, so they've got, some areas, some individual areas and individual builders that may have a leg up on some of those things. But a lot of them are dealing with the same exact problems that we are. And, we deal with a lot of the same sub base, and everybody is, cawing at those subcontractors. I was telling somebody the other day, we used to bid our projects to multiple different subcontractors, and we'd get their bids back, and we'd figure out who was the most value for the job that was going to get done. And then we'd, try to negotiate the best price. And the tables have been completely turned. It's now like, hey, if you want me to come do your plumbing or your electrical, or, put in that HVAC, how much can you pay me to come out and do that? And I'll tell you when I'm going to come. And so it's really gotten to be that sort of environment where, where people are, people are so busy that it becomes very difficult, particularly in new markets, to get vendors. Fortunately, we've been in a lot of our markets for a lot of years, so we do have some loyalty factor with some of our vendors. But a lot of them are on allocation for their different materials. So they can't supply everything that we need, even if they wanted to, which means we've had to go out, increase our vendor database, increase our supplier database, just to get more allocation of materials onto our projects. And, the new vendors that don't have a loyalty level to you, it's really pay up or, sorry, we're not taking new customers. And it's a tough spot to be in as a builder.
Yeah, I don't know if you face this. I just spoke with one of our partners on our Reno project, and he said his subcontractors won't even buy the materials anymore. That's on us now. They'll just show up and do the job, but we have to get all the supplies. And he's even had to buy a truck to go drive through a few states to go pick up some random garage doors he was able to find, and couldn't get anywhere else. What kind of changes have you experienced like that?
We've seen the exact same thing. The vendors are afraid to buy the materials because then they have to give you a price. Mm-hmm. And if they give you a price, it could change the next day, and then they're losing money. So, the only way that a lot of them will do it is a labor only contract like that. And we're seeing that more and more across all of our vendor bases. And it becomes, very difficult to try and price anything very far into the future because you don't have enough place to store it all, so that, single family has really been a just in time sort of material business for years and years. If you go build an apartment complex, well, great, you might, throw a bunch of connexes out there and, store materials. But, that's not a luxury that we have, particularly in infill building. About 50% of our business is building on infill scattered lots versus building on the other 50% is building in subdivisions. And so that, the building on scattered lots, there's just nowhere, you just can't store the material. So it's definitely been a challenge, and we've had to really front a lot of capital for both, our material suppliers and for our vendors to make sure that the materials are available.
So how do you, excuse me, how do you even forecast in that case? How are you able to determine in advance how much it's going to cost you to build a home?
It is extremely difficult and nearly impossible right now. So we
That's
are
a challenge.
yeah, basically what we're looking at, because at least now we have a little bit of historical data on the craziness that has ensued here. And so, we're putting in much stronger contingencies based on when we think that the project is going to start. And then we are also in all of our building contracts, we're putting escalation clauses in the contracts that say, hey, if the index goes up, then the price of the bill or the price of the home goes up. So our clients have the ability to terminate if the prices have gone up too much and they just don't feel comfortable with the project anymore. But that was really the only way that we felt that we could continue on building homes for our clients is to figure out a fair and balanced way to do it. So, we thought, hey, if we can track it to an index and prices go up, then we'll recoup the additional material cost. But if the market just goes up over and above the material cost increases, then our client is still getting the benefit of that market appreciation, which has, been a backbone of our business model, since we started. And so we felt that was, a good way to protect us and still give our clients what they're looking for. Otherwise, we wouldn't be able to sell anything at all. And that's really the only way that we felt comfortable to continue to sell and build homes in this market.
How are you structuring it? I imagine in the contracts you've got a clause that says, prices could go up, right? That's what you're just saying.
Yep, absolutely.
Yeah, and people will be obviously quite upset about that, but you're not in the business to lose money. It's not a business that will be sustainable. So do you ask for a deposit, or are you? And I know some builders are just starting to find ways to build spec and not put anyone in contract till the end, till they actually know what it's going to cost. I mean, how are you handling these challenges?
Yeah, so like I said, the price escalation clauses are the best way that we found to do it because it allows us to contract up front, and it's very transparent. Our clients know, everybody at this point, everybody knows what's going on in the world.
Mm-hmm. Hopefully.
And yeah, and so and our clients are very sophisticated. We're typically not dealing with people that are wanting to live in the homes because we sell homes to people that want to own them as rental properties. So they're sophisticated clientele. They understand what's going on in the marketplace, and it gives them an option, right? Because it's so hard to get inventory right now. There's such a short supply that really what the contract does is it locks them in a place in line so that they know that they're going to get a property later down the road, when the home is built, and it also essentially gives them an option. If the prices go up and they're not comfortable with it, they get their deposit back, and we actually give them an interest rate on their deposit while we've been holding it, so that they're not completely, out during that holding period. And that's just a decision that they make. And I think some of our investor and buyer clients, look at it just like that. They look at it from a very much a financial transaction. And and it's a way for us to enable them a spot in line for a house, as opposed to waiting until the spec is done and then selling the property at the highest possible price and everybody's bidding out through the roof. that's never been our business model. We've never been a high stress sales sort of scenario. We like to give people, a lot of options, let them take their time to make a decision. And, if it's a good property for them and a good market for them, and they feel comfortable with all the variables, then they go in and, and they are able to make that decision now without having a lot of the panic that comes with a finished property, because when a property is done, the builder wants it sold and everybody's been through the roof. And, so our clients aren't having to handle that, aren't having to deal with that. And they're getting the benefit of any appreciation that happens during that, during that build process.
Do you think the cost of materials will continue to rise with the Ukraine invasion?
It's almost seems like there has to be some cost, and and I say some cost because we're seeing gas prices go up so much. So oil affects so many different things in the build process. The majority of which is shipping. And this is a thing that a lot of people don't think about. They think about the actual components. What is oil used in? Well, it's used in shingles for sure. That's a petroleum-based product, but really getting the materials to the job site, is massive. And we're already seeing fuel surcharges before the Ukraine invasion. So we do anticipate seeing some additional pricing increases as it relates to gas prices and petroleum. And now I'm going to knock on wood when I say this. Prices have been relatively stable over the last 3 weeks. So, and that's in today's world, that's saying something. Where, 3 weeks without us having to do any sort of increase in our base price on a home is very significant. There hasn't been many times in the last 2 years that we've gone 3 weeks without increasing the base price of our product. So it's one of those anomalies out there that it's hard to say exactly what's going to happen. But the fuel prices are an easy one that we know we're going to start seeing surcharges on that shortly.
Do you worry that the cost to build and the cost of the final product is just going to be too expensive for the average person to buy?
Oh, I absolutely am concerned about that. To me, and this is, to hear a builder say this is uncommon, but I just wish if it would just level out, right? Even if it didn't go back down, if it just leveled out right now, we would be very happy. Obviously I build the majority of my homes in Florida. Florida is still an incredibly inexpensive market to live in. The cost of living is very low here compared to, almost anywhere else in the country. You look at any of the northern states, California for sure, our median home pricing, even after all the increases that we've seen, is still, 30-40% below most of the rest of the country. So we do still have affordability here, but I want to continue to have affordability. So it does concern me from a general home buyer standpoint. The flip side is again, we're a builder that builds rental homes. So, as people are priced out of the home ownership market, it does drive a lot more very qualified people into the renter pool. And, and that's what we're seeing here in Florida today, from a combination of people coming here because of, COVID restrictions, meaning that, they don't have to work in an office anymore. They can work from wherever they want to work. And a lot of people are picking Florida. It's a warm state to begin with. We have no state income tax here, and it's a relatively low cost of living. So we're seeing a lot of in-migration to the state, more than we've ever seen, and we've seen huge in-migration. But that's done a lot to drive up in rental prices as well. So yeah, I actually looked up a few examples here before we got on the show. But one of our Jacksonville quad communities that we finished about a year ago, we were leasing those units for $1,250 a month. They're 2-bedroom, 2-bath units, and the first round of those is coming up for renewal just this past month, and the renewal rates for those units is $1,650 a month. So
oh my gosh! Wow,
$400 increase in that market in just a 1 year time period, and it's happened in all of our markets to some degree or another. Palm Coast, one of our popular duplex models, the duplex units there went up from $12.95 a month to $15.25 a month from March of last year to March of this year. Ocala, the same. One of our popular single family plans went from $15.95 a month to $18.45 a month.
Wow.
In a year, and same in Cape Coral. Our single family plan went from $17.95 to $2,095 a month, and and the people have the income to pay it, which has really been a welcomed factor for us. As we've seen the build costs go up, the rents have been lagging. Rents are about 12 months behind the material price increases that we've seen, but they are still coming, and we're getting really qualified tenants. There's a lot of people that have really good jobs that are moving into the market, and then also wages have gone up. Take our company for one. We saw the effect that inflation was having on our staff, and January 1st we did the largest annual pay increase that we've ever done in the history of our company. And people are like, Chris, how do you do that? And when everything else is going up so fast, and it's like, well, that's why we have to do that, because our staff can't, they can't come to work worried about, man, I can't put food on the table and I've got to go get a second job. I mean, that doesn't do anything to help, productivity here at the company. And that's something that we've really taken a hard look at. And I think honestly, some of our vendors have as well. That's why we saw a significant uptick here in January for labor and material costs. I think everybody had to really just kind of, step back and realize that this isn't, it's not going backwards anytime soon. Some things may go up and down, but overall, these prices aren't going down. And we've got to, we've got to address it before we start to lose staff and, dismantle a team that's taken years and years and years to build, because, that doesn't get anybody anywhere either.
So what's the typical price for like a 3-bedroom house for you?
It ranges wildly depending on the markets, but a 3-bedroom house is going to be somewhere between $275 and $350 at this point in time.
That you're building at that price?
Yep.
Yeah, I mean that's a skill, right? Because here in California, I mean it's $120,000 to $140,000 just for the fees, right. The school fees and all the fees just to get started. So it would be impossible to build a home in California at that rate. I mean, maybe someone's pulling it off, but I don't know if you saw the recent headline where LA was building homes for the homeless, and it turned out they were costing about $860,000 per studio home for for the homeless. So it's really hard to pull off in California. So to me, there is still quite an opportunity to acquire a brand new home for $300,000 in the fastest growing market in the U.S. That's still an opportunity, even if the cash flow maybe isn't as good as it was. It probably won't take long to get there, because you're locking in a lower price, relatively speaking. You're locking in a relatively low interest rate. People complain about interest rates, but listen, if you've been in this business long enough, you know that we're still at historically low rates. They're still incredible. I started investing when they were at 11 or 12%. So I remember when it went down to 9% and my dad refied everything. He was so excited. But with all this inflation, rents will probably continue to rise, increasing the cash flow for investors. I mean, do you believe that to be true, that inflation is here to stay for a bit?
Well, I believe inflation's here to stay, and I believe that I believe that there's a long fuse on a lot of these things. Like build cost prices. People ask me, do you think the price of housing is going to continue to go up? And particularly for new construction, the answer is almost certainly yes, unless there's some cataclysmic event that happens that keeps it from happening. Because today we're building at the highest price that we've ever built for. So we have the highest cost of materials that we've ever built for, and and those properties are already sold to end buyers, but they haven't closed yet because they're still under construction. So, most of the sales data is done based on closings, not on what's under contract for sale. So as those closings come online, it's going to drive the median home pricing up in the data that's reported to the public. And and all of those projections have been done based on what we think rents are going to be. We know what rents are now, and we know how much they've gone up. And then we anticipate that they're going to go up further. When we look at it both ways. We say, what do we know that we're getting today in today's market? But because the market has changed so much, if you want to do any sort of deals or any sort of transactions, you've got to take into account that inflationary effect, or else nothing seems to make sense, or it makes sense on a much lower cash flow than you've ever looked at before. So it really takes a little bit more analysis in today's world than it ever used to, because things used to change so much slower. Back
Right.
it's like I said before, it took 16 years for prices to increase as much as they've increased in the last 22 months. So that really changed the rule book on everything, on how you have to look at the investment strategy, and how you have to forecast rents. 2 years ago, 3 years ago, we'd say, well, rents are what they are, and they're probably going to go up $50 a year, and here we are, they're going up $300 a year.
Yeah, we've had a lot of really happy RealWealth members who did lock in a price a year ago, and even with the escalation clause, they're still way ahead of where they thought they would be. So when does the escalation clause kick in? You can't just unilaterally decide, hey, we're going to raise the price of this house, can you?
Right. So it kicks in when when the slab goes down. So when construction has materially commenced, then that's when we take a look at what the index is. So early on, we didn't have escalation clauses at all. We just had we just put these clauses in March of 21.
Yeah, because you would just eat it. If prices went up, you just eat it, right? And investors would be really happy because they locked in a low price, and they were, you're basically giving them all the equity.
Yeah. So early on, we did a lot of eating it when these prices went up, and then we had basically a termination clause previously, and it just said if the world went crazy, essentially we'd have a cause to terminate. And the world did go crazy, and that didn't feel very good, because you felt like we needed more of a metric to calculate. And so we based it off of the indexes, which honestly still doesn't completely cover us as a builder, because the indexes don't always track the micro level issues. It's not a perfect system by any stretch of the imagination. But it's the one that we found that works best, and that's fair for both parties.
Wow, crazy times. So you're not just talking like how should I say this? You are one of the best people to talk to about rents and new home costs, because you both build the homes and you also manage a huge property management company. So I'm just curious, who are these people? I mean, are you seeing a massive influx of people from other states, or are they from within the state and just moving around? Who are these people? Why is there so much demand?
Yeah, so we're seeing it from every component. We're seeing it. So we're seeing a lot of people coming in from out of state. You have a lot of people that are working from home. And we know that because they're very concerned about internet speed. So that's one of the questions that we get, particularly from the work at home contingent, is wanting to make sure that there's cell signal at their house, and that there's ample internet service. So that's your out of town component. But then and then you've got your normal demand from just your local people that are going through the stages of life, having a family, and now all of a sudden they need a house, and they need some extra space, and a yard and a bedroom, and moving into one of our single family properties. There are just an amazing number of job opportunities in all of these markets in Florida. You pick Jacksonville, for instance, you've got a huge financial sector here, the military bases, all the distribution centers that are going in over, all over the place. Of course, we have, plenty of construction workers. There's plenty of people in the building and construction business these days. And then we still do have some service workers. When COVID struck, we did a survey of our tenants, and we had about 9 or 10% of our tenant base was service workers in the service industry. So it's really, it's wide ranging and every walk of life.
Amazing. Well, thank you. You're helping alleviate the problem of affordable housing. If you can just keep it up.
Well, we plan on keeping it up. It's one of those things. We've learned a lot of new skills over the last 22 months, and we intend to continue to use them and be here for a very long time. So
awesome. Well, thank you for joining me here on the RealWealth Show. Really, really great to see you again.
You as well, Kathy. Thank you so much.
And thank you for joining me here on the RealWealth Show. You can get more information on how to acquire build-to-rent properties in Florida and other booming markets by joining RealWealth at realwealthshow.com. It's free to join, and once you're there, you'll get access to our investment counselors, property teams, lenders, 1031 exchange facilitators, attorneys, CPAs that specialize in real estate, and so much more. I'm Kathy Fedke, and thanks so much for joining me here on the RealWealth Show.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.